Why is Sensex crashing in 2022? Well, that's $1 million question. Uh, in India, the Sensex is a key measure of a company's trading value in relation to the total market. As a result of recent economic turmoil, it has been steadily decreasing over the past few weeks. Experts predict that it won't be until 2022 that it will return to where it was once. The fact is that many investors have abandoned stocks because they are afraid of uncertain market conditions and unsure what their money should be invested in instead. When the 2008 financial crisis hit, it affected most of the world. However, India has since recovered and is now more stable than ever before. Okay. In fact, India accounts for over 62% of the population in South Asia and is also part of the BRICS aliens. Okay, this means that the country will continue to boom in terms of economic growth and foreign trade. It is predicted that by 2025, they will be ranked as the fifth largest economy in the world after China, Japan, USA, and Germany. The fact that this growth seems to be more promising than ever before is exciting for many investors. The benchmark Sensex index has averaged an annual return of 18% between 2001 and 2012. In contrast, the S&P 500 averaged just 9.5% during this time. This means that this platform has more lucrative than any other on offer in the market. However, over the past year, it has dropped 6%, which is not what investors want to see. The fact is that much of the country's growth has come from foreign direct investment FDI coming into the country. This has pegged India as one of the best places to invest in terms of technology and outsourcing services. This has helped many of the country's biggest companies to see a huge increase in their trading value as a direct result. In 2011, it was predicted that the country's GDP would surpass China's, by the end of the year. This has since happened and is set to continue for at least another decade as well. The Indian exports have also grown over 20% since January 2012, which is significantly higher than the average growth rate of just 8% recorded over the past few years. This, coupled with rising job creation numbers across a wide range of industries, shows that India is on the rise once again. In fact, they are said to be considering an increase in their gold reserves and plans to invest more money in infrastructures projects. As a result, their GDP will continue to increase and become even more important throughout the Asia. It is suggested that by the year 2022, India will see an increase in their investment penetration levels and will be seen as more attractive market. It has already been predicted that their GDP growth rate will increase to over 8% within the next 2 years, and this figure is expected to rise even higher as time goes on. The fact remains, though, the country's biggest asset is its people, and there are now more job opportunities than ever before. According to Bloomberg Business Week, there are roughly 180 million youths aged between 15 and 29 who have given up on finding employment in the country. But all this could be about to change. The fact remains that the Indian markets have not always performed well in the recent months. In fact, as of June 2022, there were only 0.75% growth for the past 12 months. The fact that many investors have left the country, stock markets is just one of the reasons why the drop in value has occurred. In fact, currency volatility can also play a massive part in the way the market performs, and many investors are really struggling to get their head around this. Although they make up a small percentage of business at present, they could be having an extremely harmful effect on the economy and how much money is circulating throughout it. It makes sense to invest in physical gold or silver to protect yourself in case of any upcoming economic crisis or future currency devaluation. This can potentially continue for years, and there are many commodities that you can buy at a good price and use it in your everyday life. A few of these include coffee, tea, sugar, as well as cocoa. If you're interested in trading stocks, then it is also suggested that you look out for the trade signals that are coming from the currency markets. In addition to this, it is easy to keep up with the latest news regarding stocks by adding an RSS feed to your news feeds, so that you can stay informed on everything in your line of interest. If you have ever wanted to invest in India's stock markets or cryptocurrency market, then now might be the time. It is predicted that they will continue to rise, and it is important to remember that an investment in stock should be not seen as a short-term fix. Instead, you should view it as something that has the potential to grow over the next few years and even decades. Okay? Invest wise, trade smart, take care, peace.